In the end, Hamilton's interpretation of the Constitution won out. In 1791, George Washington signed the bill that created the Bank of the United States. The bank was chartered for 20 years. It opened in Philadelphia, then other branches opened in port cities. The bank was owned partly by the federal government and partly by private investors. It was by far the largest financial institution in the U.S. at the time.
This was the government's bank, or as many people say, the government's fiscal agent. It received the government's revenues, held its deposits, and made its payments. It was also a bank for the public, accepting deposits from and making loans to businesses and individuals.
Unlike modern central banks, the Bank of the United States did not officially set monetary policy, and it didn't regulate other banks. Yet, because the bank was big and had branches in several cities, it influenced the whole country's economy. In fact, it was so influential that a change in its lending policies affected the lending practices of state-chartered banks, and that affected the availability of credit nationwide.
Even after the First Bank of the United States had been around for 20 years, arguments over whether we should even have a national bank were still very much alive.
Congress was still evenly split on whether or not such a bank was needed, or even constitutional. And in 1811, the bank's charter failed to be renewed.
No more national bank, at least for a little while.